You already know what it is. You already know what it is. Nothing but love. Nothing but love. You guys know what's coming. We had another Chris Sain weekly penny play video, which we got another Trey's Trades weekly penny play technical analysis video coming to you today. What is up, everybody? Welcome to Trey's Trades, where we get technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So, today, Chris Sain put out or I suppose it would have been yesterday. Yesterday, Chris Sain put out his weekly penny plays list, and it covered a couple different stocks. The list consisted of OGI, GNUS, ZOM, and IDEX. We're going to get into each one of these different stocks and tell you what my personal opinion is on how the charts are set up. And I'll give you a list from 1, 2, 3, 4 and my favorites on what stocks you should get into based on previous growth and the setup for growth in the future. Let's start off here with OGI. Now, OGI, as Chris Sain did point out, is a medical marijuana play. We can come over here to their profile. They're formerly known as Inform Exploration Corporation, Canada-based company, which operates through its subsidiary Organigram, licensed medical marijuana producer. The way that the chart is set up, guys, I'm going to get this as a brief run through. We're going to mainly focus on technical analysis, just so I can give you the best possible chart setups here. OGI went for a pretty nasty ride here. And what I like a lot is that it did not pull back very harshly. We saw a run up to about $2.58, and it only retraced to about 38.2%. Now, a good stock on a chart, right? When it retraces or has the pullback, that's what a retracement is. Drop a Fibonacci. What will happen is it'll only pull back about 50%. So anything above 50% as a retracement is a very solid retracement. And the RSI indicator, which I have pulled up right here, the relative strength index, anything over 70 being overbought, anything under 30 oversold. This is trading at 49.99, neutral, which means it's not a terrible time to buy in. We want to buy a stock, right? Pull the trigger when it is being oversold or undervalued, right? Traders are probably the only people on the planet that will buy things overpriced and sell things undervalued. We don't want to do that. We want to buy things when they are undervalued, right? So the best possible entry point for this, to me, based on retracement, right, and current levels that we're seeing for support, is going to be right around here at about $2.29, which is trading about 8 cents cheaper than we are at right now. This on the RSI would probably pull back to about 40, right? And just based on the overall macroscopic trend of OGI, I find it pretty likely that you won't see it pull back much more than this. It has been about 3 days, right? It's been trading here for about 3 days. Had a small pullback again, but we do have some nice green wide range candle bars. Look at this. Right, we've got 3 huge wide range candle bars right here. Did pull back all the way down to previous levels, but it is respecting this level of support very, very strongly. One thing that I don't particularly like is I like to see a more of an ascending formation. We do have a small one, but it is ever so slightly. We do have this slight ascending level of support, and you might end up seeing here in the future a descending level of resistance. Now, within the next couple of days, what might this look like, right? Well, you may end up seeing this squeeze down in price action, which means that it might push above this descending level of resistance, just based on the macroscopic trend being pretty bullish, right? That you're pretty likely to see it have a nice move here in the next couple of days. I would argue in the next 3 days, OGI is set for a pretty good run just based on the overall chart setup, right? We do have this crossover between the 15 MA and the 200 EMA back here on what would have been January 26th. If you're able to get into this back then when it was $1.70, you'd be sitting pretty good right now. And as it sits, this looks extremely bullish. Overall volume is very, very consistent, which makes it a predictable stock. I like that a lot. Good entry point for me, if it ends up respecting this ascending level of support, is going to be about $2.33. I like it a little bit more if we can get this right around here at about $2.29, as I mentioned earlier. And if it does break but a little below that, right, you're going to be looking at about $2.24 as the next level of support. So Chris Sain's rule of thumb is you hold this play for anywhere between 1 to 2 weeks, or look for a 20 to 50% run up. Based on both of those guidelines, guys, I think the best course of action here is going to be that's 20 to 50% run up. I do find it pretty likely that is going to happen here within the next couple of days. I would argue the next 3 days. Good entry point is going to be around 224 to 229. That is how the setup looks right here. Next play is GNUS. This is one I don't particularly agree with, but we're going to give you how the chart setup looks personally, just based on what we're seeing right now. So if we do draw up a retracement of Fibonacci, this is very easy to do on Webull. You simply come over here to Fibonacci retracement with the bottom at the base of the run-up, the peak at the top, and it gives you an idea of the overall strength of a chart setup. And what we can see right now, guys, is this is not a very strong chart. It's pretty weak. And when I say that is because it almost retraced back to 100%. You can see this line right here being 100%, meaning they gave back 100% of the initial run up. That does not show a lot of strength. That actually shows this is a trader stock or it could be a pump and dump, right? I know Chris Sain is very high on GNUS as a 2021 play. I'm not saying that it's not going to be in the future, but within the next 1 to 2 weeks, it may or may not run. All right. So we do have what seems to be the beginning of another small setup here, but I'm not entirely convinced. I'm not entirely convinced. I like the other plays quite a bit more than what we have available here. It is on an ascending level of support. So if you are looking for an entry point here, I would say that either $1.83 or if it respects this ascending level of support, $1.88 is going to treat you pretty well. So watch for entry point around these areas between $1.83 and $1.88. On the R side is trading neutral at 50 once again. And if we do look here, the one thing that I do actually like a lot about this setup is we do just now have the 15 MA gapping up over the 200 EMA. Why does that matter? The 15 MA is the moving average, which is a price action based valuation trend line over a 15-day moving period, a small microscopic perspective of price action. 200 EMA is the exponential moving average, which is a price action based valuation trend line over a 200-day moving period or a macroscopic perspective of price action. When you have the 15 MA cross over the 200 EMA, that means the recent price action is varying on the upside for positive movement. This typically is a way to indicate that, hey, the price action we're seeing right now is unusual. This could be a way to indicate when an upcoming run happens. That is the one positive thing that I like right here. Is this seems like a beat the hype play. If you do get into this, you're going to be looking at getting in before the initial run up, right? The other stocks I'm presenting you have already run. We already know what they're capable of. But GNUS, we don't know that yet. It does have consistent volume, right? We do see that. It is trading at 50 on the RSI, so the risk is low, right? There's low risk here. But in my opinion, there's also somewhat low reward. This does look like a pump and dump. I know that GNUS was involved in the WSB stuff going on, right? They get pumped because it had quite a bit of short interest. So take that for what it is. This is probably my least favorite, but I will tell you that in the future. $1.82, $1.80 to about $1.88 does look like the best possible entry point here. And then 20 to 50% to 1 to 2 weeks. In my opinion, you're probably going to be looking at the 1 to 2 weeks for this play in order to really make it rock the way that you want it to, right? This might take some time to develop, and that is my take on GNUS. If we come over here next to ZOM, this is a great play. And this is honestly one to me that I think is better off being held until March, right? And be careful buying into it. It has done a little bit of run up, and he does preface this in his video. And it says, guys, if you do get into this play, please wait for a pullback. And I do think you're going to have that opportunity for a pullback because if we do look at this chart macroscopically, right? We do see that when it has runs like this, it does have pullbacks. It's a volatile stock. It does a lot of ups and downs, ups and downs. It's a good stock to rinse and repeat. You are looking for that sort of method, right? So coming back here to the 1 month chart, how much can we expect, based on previous trends for it to pull back? Well, we do just look at the overall trends, right? We can see that in the past, it retraced to 61.8% here. And we can look at the retracement after that from here, which was, take a quick peek, about 61.8%. So if we do follow that exact same trend and we take a peek at this, right, 61.8% would be about $1.66 in terms of retracement. I think that is going to be a pretty solid entry point for you to get into ZOM if you are looking for a solid entry point. $1.66 is where I think this stock is most likely going to pull back. It is extremely overbought right now. It is 77 on the RSI on the 3 month chart. If we look at this on the 1 month chart, guys, it's still looking extremely bullish, obviously. Once the RSI does load here, I will show you what the numbers look like, but it is overbought, and you got to be very careful buying in right now. So, nice gap between the 15 MA and the 200 EMA, which is typically a good sign of a bullish run. This isn't bullish territory, very obviously. And I'm going to actually zoom out here and delete the overall Fibonacci retracement just so we can clean up the charts a little bit. But if we take a peek, right, sitting at 70 on the RSI, 70 is overbought. That means the stock is likely overvalued. So you want to wait for that pullback. You wait for that pullback, it is going to treat you pretty well. I think that is going to be a good opportunity for you to get into the stock. Is somewhere between 166 and probably 172. That does look like a solid entry point into the stock. You guys have to excuse my voice. It is giving out a little bit. I've been really grinding away on these videos. But this is probably my second favorite or favorite play across all the plays that he presented. I think that ZOM has a lot more potential late March when the True Forma system does end up getting commercialized, but it has a lot of great sentiment, right? And it's got great price action. We can see here that it is continually stair-stepping higher lows and higher highs, right? Which is exactly what we're looking for in a stock. We got 1, 2, 3 different touch points, which means this is a signified ascending level of support, right? And we may end up seeing it pull back down to here. I don't think it's going to come all the way back down to $1.25 tomorrow, but eventually it will, right? And as in terms of, the 1 to 2 weeks or the 20 to 50%, this may be a play that takes some time to play out, right? Just based on previous trends. You can see it usually runs up pretty hard, then consolidates for a while, then runs up pretty hard, consolidates for a while, right? If it does follow that overall trend, I anticipate that you're likely to see that happen. Now, it might continue to run. That is also possible, right? We saw it run for 1, 2, 3 straight days. This is 1, 2, what could be 3 straight days. So if you do want to get into this immediately, this is overbought, so be very, very careful. I do think it's more likely to see it pull back. I would highly, highly recommend that you wait for a pullback if you are going to get into the stock. But if you are going to buy in immediately, please set a trailing stop loss for about 5 to 10%, which is what Chris Sain does recommend on his videos. I would also recommend that as well, because then you're going to cut your losses. You'll be able to buy in at the bottom, which I anticipate is going to be about $1.66. And if you buy in at that point, the risk is low, the upside is extremely high, and ZOM looks absolutely beautiful. Last play I want to present to you guys is going to be IDEX. This is the last play that Chris Sain presented on his channel, and this is probably my favorite out of all the plays. Guys, I've been talking about IDEX on the channel for quite some time. I think this is going to be an absolute monster stock by the end of the year. I think $20 to $25 is not unrealistic in the least bit. The only reason people don't like this stock, guys, is because it has a history of being a pump and dump stock. If you look at this on a 6-month chart, you can see that is the case, right? We saw a huge pump, huge pump, but now it is in a clean, upward moving channel. The chart setup here is absolutely disgusting. It is filthy. You were able to get back into IDEX when it was trading here at about $1.90. When the 15 MA just crossed over the 200 EMA, $2.14. You would be sitting so goddamn filthy right now. What happened is it did break above this ascending level of resistance with a wide range candle bar. Now it's treating this ascending level of resistance as an ascending level of support, right? And we had basically rinsed and repeated and started a new channel. You can see here that we have a new channel set, right? This is going to be a new ascending level of resistance right here. So what's a good entry point into IDEX? Currently trading at 48 on the RSI. So I do like that nice, healthy pullback. In terms of how the stock retraced, we can go like this, take a quick peek. And it is a healthy pullback, right? It only gave back about, I would say, 30% of its total run so far. That is very, very healthy. So if you are looking for an entry point, right, I find it most likely, first off, that it is going to respect this ascending level of support, which an entry point then would mean about $4.88. But if it doesn't, we do have a nice level of support sitting right around here at about $4.75. The difference in price is not extremely high. So let's say that you buy in at about $4.80, right, $4.90. And it drops down to this previous level of support. I think that's going to treat you pretty well. You can dollar cost average down, meet somewhere in the middle, which would be about $4.80 or so. And I don't think you can go wrong with IDEX whatsoever. And guys, this is a play that I think you're going to be leaving some briefcases on the table if you just collect the bag, right? If you could easily take your 20 to 50% run up in this, but my recommendation to you would be to hold for 2 weeks and see where it's at. Honestly, in 2 weeks, I think this is going to have a lot of potential not to be a penny stock anymore. So I would highly consider holding your IDEX position until at least that 2-week mark, reevaluate, and go from there. So chart setup is beautiful. We've got great consistent volume trading at 48 on the RSI. So this is probably, besides GNUS, the second most undervalued stock out of everything that we've covered so far. Has the second least amount of risk compared to GNUS, right? And I think it has the most growth. So if we want to go in order of my favorite plays that Chris Sain did put out for us, IDEX is easily number one. This to me is actually a mid to long-term hold stock. I would consider holding this for 2 weeks if you are going to establish a position in IDEX. Second for me would be ZOM, Zomedica. And this has another nice setup, but it is a little more risky to buy into right now. Please wait for a pullback. This is another good midterm hold stock. So I would recommend holding it for 2 weeks. That is my personal opinion, right? Third favorite is going to be OGI. I think it says a pretty decent setup. It is moving very cleanly. It does have that nice squeeze down of price action. I would anticipate a nice move here in the next 3 days. I don't personally take a great stance in medical marijuana. We do know that with Joe Biden in office, that it is likely we see harder pushes for stocks like this. So down the road, this could definitely be a good long-term play. In the short term, as of things now, right, I think the best potential is going to be to watch for that 20 to 50% run up. And then GNUS, as per usual with my previous video, is probably my least favorite stock out of the Chris Sain plays, but it does present the least amount of risk. So it all depends on your level of risk management, right? How much risk are you willing to accept, and how much money do you want to make, right? Because we can still make money with GNUS. The risk is the lowest, but I think the setup is probably the worst with GNUS, and that is my personal take on the 4 Chris Sain weekly penny plays for his channel. And that is what I have for the video today. So if you enjoyed it, please drop a like. It really does help support the channel. And consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull. This is version 4 for the desktop, which is a great platform, allows you to trade starting at 4 a.m. In the morning in the pre-market. Use my link, you get 2 free stocks with a $100 deposit. I'll receive a free stock. Great way to support the channel. If you're not interested, my friends, that's totally fine. I just appreciate your support by taking the time to watch my video. So that is what I have for you guys today. Thank you for watching, my friends, and I'll see you all next time. Peace.